Can you hear?
Hello, good morning. Can we confirm you can hear me? Hello, good morning, everyone. If you can hear me, please kindly use the chat box to let me know you can hear me. To confirm the audio is good, loud, and clear. All right, thank you very much. I got a confirmation from Angel. Good morning to you. You're welcome. Thank you for joining us. All right, let's get back to it. Good morning once again. Good morning, everyone. Good morning, ladies. Good morning, gentlemen, and traders as well. And if it's your first time today, good morning to you. It's good to have you join us for today's edition of the morning market review. All right. Of course, on this program every day. Thank you very much. I did. I hope you did too. Uh, so on this forum every day, we get to look at what's going on in the markets in terms of fundamentals and technical setups as well. All right. And this is also with the hope that we'll be able to pick a few entries from the analysis. It's good to know. Thank you. And trade ideas for today, and even for the rest of the week as well. Okay, let's get right to it. Like I said, and usually we start with the majors, and then from there we start examining other pairs as well. Okay, here's for trade opportunities and other ones that you can as well have some watch lists for trade opportunities. Um, I also like to add that all of this is also with the hope that when you have listened long enough, you're also able to come up with your own profitable strategies that will give you an edge over the markets. All right. So I'm going to head straight to the trading platform. In terms of fundamentals for today, we do not have any high impact news of the economic calendar that will impact price for today. Okay, just a second. I'm going to head to the trading platform. I'd like to start with the dollar index. Okay, so I have the trading platform up. I want to believe you can see my screen. And what I have displayed here is the dollar index. All right. Usually, I like to start from here to understand the direction of the US dollar, and then I can easily apply this to the rest of the major pairs. All right. Okay. So for the dollar index, it's one we've talked about multiple times, and of course, the main talk has been around the tariffs in recent times. Thank you, Adeyemi Laleko. Thank you for joining. It's great to. Of course, the markets have been very bearish, aggressively to say the least. All right, and of course, Usually, it's not something that is new. We've seen this multiple times in the past. All right. Uh, During the global financial crisis in 2008, market crashed like up to 56%, and of course, it recovered right after that. And even 2020 during COVID saw another massive drop, uh, up to 38% at that time. And even, I think it was federal rate hikes as well in 2022, also saw market crashing about 27% as well. So this is not news. This is not new. We've experienced this multiple times, and then we also expect, of course, the market to rebound. All right, so I expect the market to rebound. You and I, we do not have control over the markets. We don't control the tariffs. But one thing we can control, of course, is how we respond to all of this. Okay. Um, so for the USD index now, like I said, it's one that we have talked about multiple times. And then I remember highlighting this current move from 110 that we currently have. All right. Um, I talked about how it is similar to what we got back here in 2022. All right. Similar to what we got back here in 2022. You can see this move here. Hold on. All right. So here we saw series of lower highs and lows back in 2022, series of lower highs and lows, all right? And then right after that, the market collapsed, all right? Collapsed this much. And then we got some retracements. Of course, at this time, I was expecting price to fill in some of this imbalance that's created here before the sell-off, but that didn't quite happen. This was quite a shallow pullback. It didn't quite fill up this imbalance that was created here as a result of this aggressive sell-off. All right. And right after that, after this shallow pullback, uh, the market sold off quite aggressively up to uh, around this 100.6 as support. Okay, now I'll take this and then fast forward to what we have here. With that in mind, we now take that to what we have here. Okay. So again, we saw series of lower highs and lows. All right. So this series of lower highs and lows. And then another aggressive sell-off, right? And then after that aggressive sell-off again, I was expecting the market to fill in some of. Okay, it's back now. Sorry about that. Wisdom, it got disconnected for a second. It's back now. I hope you can hear me. So I'm going to go back to this screen. Right. Okay. So 3 day sell-off right here, 1, 2, 3. All right. And then after the sell-offs, I was expecting price to fill in that imbalance that was created right here before the aggressive sell-off. All right. Of course, that area will come in between 106 and 105.5. So that area. Again, that didn't quite play out as expected. Again, we got a shallow pullback. All right, we got a shallow pullback, and then we saw yet another aggressive sell-off, a few pips away from the 100.6 level that we got back in 2022. All right, like I just pointed out. Just a second. Right, the 100.6 level here back in 2022, and then fast forward to what we have currently. Again, a few pips away from the 100.6 level. All right, now from the 100.6 level back in 2022 here, of course, this is purely technical analysis. We're trying to use what has happened in the past to anticipate what is expected. All right. So from this 100.6 level now, back in 2022, we saw this move up. Price came back to 100.6 level, and then sweat liquidity back here, and then got aggressive, even more aggressive from that point. All right. So as it is right now, a few pips away from the 100.6 level, will a similar scenario play out? Only time will tell. All right. Only time will tell. That's why, as much as possible, we trade what we see on the chart. All right. Now, to put some perspective to this, again, let's take it back to that period. But before I do that, now, at some point here, this was September of 2024, last year. All right, price came back to the 100.6 level, and then it was this break above the 102.6 here that gave rise to this bullish move. All right, it was this close above 102.6 that gave rise to the bullish move all the way to 110 resistance. All right, now currently price again is above 102.6. Currently, we have price above 102.6. So we expect 102.6 level to act as with support. We expect 102.6 level to act as support for the dollar index. Now, if that is the case, what it means is that from this current level now, we can expect price to continue to push higher from this current level. Okay, I expect price to continue to push higher. Now, what is going to invalidate this bullish expectation would be a close back below 102.6. All right, be a close back below 102.6, and in that case, you can expect further push to the downside, maybe a run back at 100.6 before we eventually get the bullish move from 100.6. All right, so in summary, for the USD index, this level is one to watch. If price closes below 102.6, then we can expect further weakness, maybe all the way back to 100.6. And then, however, in the event that price stays above 102.6, and then we get a run towards 103.5 and maybe breaking above 103.5, then that would be pretty much bullish for the dollar index. That's the expectation that I have for the USD index. This 102.6 level for me would be one to watch, and resistance back at 103.5. Okay, so again, in summary, price stays above 102.6 will be bullish for dollar index, and then resistance will be at 103.5. A break below will turn 102.6 to resistance, and then we can expect further weakness. So it kind of look like this. For 102.6 level gets bullish, below 102.6 it's bearish. All right, so what are we going to get? We need to wait it out to see what we eventually have. Now, all of this is happening on the daily time frame. Let's head down to H4 to see what we have. Okay, so this is the 102.6 support level that we have our eyes on. Bullish patterns from this level, of course, that would be confirmation. We're going to get bullish continuation. All right. How about a 1 hour time frame? Okay, still need more confirmation. Price has stayed on that 6 for 1, 2, 3, 4, 5, or 6 hours now. Price is around that 102.6. We need more confirmation. We need more confirmation from that level. If price stays above or below 102.6. All right. So having said that, this is USD index. This is USD index. For those who are asking, this is USD index. Again, I like to start off right to understand the overall direction of the dollar index, and then I can apply this to the rest of the major pairs that we have, the likes of Euro USD, Pound USD, and generally the pairs with USD as one of the currencies. All right. So we head to Euro USD. Euro USD. Now, Euro USD is essentially the inverse of the USD index. So what that simply means is that they move in opposite direction. Okay. And then you can see while the dollar index, has been bearish, you can see Euro dollar has been bullish. Okay. Now let's see this. For Euro dollar, this 1.09 level, 1.09 support, 1.09 support, and 1.1 resistance will be two levels to watch for Euro USD. All right, with 2 levels to watch for Euro USD. And why is that? If you look back to how price reacted at that level in the past, you see why it's quite significant. Here, we see confluence of resistance right there, back here as well. Here as well, stay. Okay, so that's why it's quite a significant one, as well as the 1.1 resistance for Euro USD. Okay, so what's the expectation here? Of course, this is largely dependent on whether the USD index stays above or below the 102.6 level that I just highlighted. Since it has an inverse relationship with the dollar, of course, eyes would be on what happens to when we see the reaction we see for USD index at 102.6. So like I said, if it stays above, it's bullish. It break below, come bearish for the dollar. And if that happens, it breaks below 102.6, that would be bullish for Euro USD. All right. First, it breaks 102.6 support, like I said, that would be bullish for Euro USD. But if it breaks 103.5 resistance here, we get from this 102.6 support, we continue to see a push higher from 102.6 support. That would be bearish for Euro dollar. All right. So we need to keep eyes on the USD index and be able to relate that to Euro USD. Now, let's put some perspective into this. Let's put some perspective. Now, this is the daily time frame. It's the daily time frame. Price tested resistance around 1.12, around 1.12. All right. Since that happened, we got this reversal pattern, more like a data cover, right? And then we saw some bearish confirmation. Again, price retested 1.1 resistance, back here. That's on the daily time frame. Now H4. All right, so on the H4 time frame, we see some bearish structure, a pullback, created a new low because of the trace lines, all right? But there's no new low yet. There's no new low as yet, all right? This is more like a double bottom pattern, all right? Then we got a retracement back to 1.1, all right? So for Euro USD, it stays below 1.1, then that would be bearish. If it breaks above 1.1 and expect some bullish move, right? If it breaks above 1.1 resistance, that would be bullish for the Euro USD. All right. At this 1.1 resistance, if you get some bearish patterns at this 1.1 resistance, then that would be our trigger to sell Euro USD. Okay. So we see that bearish here, bearish structure here at the 1 hour time frame. All right. As in the case for the USD index, we also see how these are stayed in the same spot for 1, 2, 3, 4, 5, 6 hours as well. All right, which we also confirm for the dollar index on 1 hour time frame. That also stayed on the same spot for the last 6 hours. All right. So we need some momentum. All right. We need some momentum and some quality. Okay, so from 1.1 resistance, we continue to get very confirmations. That would be, of course, an opportunity to short Euro USD. And again, what would invalidate this would be a break above 1.1 resistance. A break above 1.1 resistance for Euro USD. I'm going to take out all of these things. Pounds USD, pounds USD. Similar to Euro USD, of course, similar to Euro USD. Then I can see channel right here. Just on 2 minutes. Okay. All right. Okay, so this channel, because price has tested it multiple times. Penske, how about now? All right, so I pointed out this channel here because price has tested it multiple times, both as resistance and support. All right, you can see multiple tests here. Broke up, stayed above the trend line resistance. All right, stayed above it for a few days, back below it, and then you see price back again as resistance. And at that resistance, also gave us a bearish engulfing candle at that resistance. All right. And then we saw a follow through. All right. Price sold off after that bearish engulfing pattern. Okay. Here, give us some retracements to fill in some of this bearish candle. Okay. And then we expect price to continue to sell off. However, this is daily time frame. So let's see what it looks like on 1 hour. Okay, again on 1 hour, we see the bearish structure, lower highs and lows. Okay, all right. So this is the last low that was created, and then that low pulled back to 1.28 resistance, and then at that resistance again, similar to what we saw for Euro USD, also expect bearish confirmation to be able to short pounds USD. Again, these are staged on just one spot for the last 6 hours as well. Also similar to what we saw for Euro USD. Stayed on this same straight line for the past 6 hours. So we need some more bearish confirmation to be able to take sell at this resistance. Again, for pounds USD, what would also invalidate this would be a break above 1.28 resistance. If that happens, then we may switch our bias to a bullish one for pounds USD. The events that we get a break above 1.28 resistance. Okay, for pounds USD. Okay, moving on to USD card. It's also one that I've talked about multiple times for two reasons. Number one, this consolidation between 0.445 right. The consolidation between 1.445 resistance and 1.43 support. Okay? Here, end of 2024, and then till March of 2025, right? Price stayed in that consolidation phase, all right, between 1.445 and 1.43. All right. Recently, this was April 2nd, we got a break below the support side of the consolidation, all right? We got a break below. Now, I remember I was telling us that the longer price stays inside of this consolidation, the more aggressive will be the resulting breakout, all right? And I also remember relating it to what we got back here. Right. What we got for this consolidation as well, right? Between 1.387 and 1.32, right? Right. Yeah. This lasted for about 2 years, from 2022 to 2024, all right? Price stayed between 1.387 resistance and 1.32 support. And then we saw multiple attempts to break out of that consolidation, all right? Almost 2 years. So again, this highlights how the longer price stays within the consolidation phase, the more aggressive the resulting breakout would be, all right? And when it happened for this level, it gave rise to about close to 1,000 pips, all right? Close to 1,000 pips right there, okay? So again, between 1.445 and 1.43, still this consolidation, and then it's broken the support side of the consolidation, right? And we got a retest, all right? It's testing that 1.43 as resistance, all right? So it is expected that price continues to push lower from this level. But this support at 1.414 has also been a struggle, okay? It's also been a struggle. So look what we got back here. Price tested 1.414 and then got bearish from that point. And now it's been a struggle around 1.414. Okay, so for the bearish move here to be further confirmed, we need price to take out this support at 1.414. All right, we need price to take out the support at 1.414. This is daily time frame. That's a more midterm expectation. So let's switch to 1 hour to see what we have. Okay, so on 1 hour time frame, 1.414 support is now giving rise to this bullish engulfing candle. All right. So at the end of this 1 hour, we get a bullish engulfing candle. All right, that presents an opportunity to long from 1.414 support. All right, that will present an opportunity to long USD CAD from 1.414 support. Uh, Possibly we see a run back to 1.43 or 1.42 right here. Okay, so 1.414 is support. At the end of this 1 hour, if we get a bullish engulfing candle, all right, then that would be a bullish for USD CAD until we see price take out 1.414 support. If you do have questions, you can drop them in the chat box. I'm going to be checking at random, all right? I'm going to be checking at intervals. All right, so that's what we have for USD cards. That's what we have for USD card. Okay, I would also like to touch on NZD USD. Also like to touch on NZD USD for this reason. Okay. Uh, First, back there, price tested, this was 2020, March 2020, price tested support at 0.555 right there. Price tested the support and then became aggressive from that support level, all right? Gave rise to that bullish move. Fast forward to October of 2022, price again came back to 0.555 and then yet we got another aggressive, all right, all the way to 0.636 resistance, okay? And then most recently, again, price came back to 0.555 support, all right? Price came back to 0.555 support. Again, got aggressive, we got bullish move from that level. And currently, price again is back at 0.555. And then we also expect price to become bullish from 0.555 support level for NZD USD. All right, now this is the daily time frame. On the daily time frame, we're already seeing what looks like a bullish engulfing candle. Of course, today is still quite fresh. A lot can still happen. All right, a lot can still happen. Okay, so let's take that to 1 hour time frame. Okay, so the expectation we have is that above 0.555, just like I highlighted what has happened multiple times at 0.555, is that we expect price to be bullish for 0.555 support level. Okay, now we've seen this move, we've seen this push to the upside, all right? It won't be bad to get some pullback from the current level, all right, to get some pullback from the current level, okay, to get some pullback from this resistance, okay, and then that will present an opportunity to buy, right? That will present an opportunity to buy. If we don't get that, and instead we see a break above this resistance right here, then that would further confirm the bullish move that we expect for NZD USD. Okay, right. Next stop, I'd like to touch on gold. I'd like to touch on gold. Okay. Um, after this, let's take this out. Try to see what we have here. Okay. There's still multiple attempts at that. Let's see the support side. Okay. Gonna make this bold. Oh, I think it's shifted. Okay, yeah, right there. All right. So um, this channel right here, I remember I pointed it out last time, last week Tuesday. Started from here, resistance towards the end of 2023. All right, towards the end of 2023. Here as resistance, here as support, here as resistance. A few pips away here, back here, again tested it as resistance, back here as support, and then right here again as resistance, and eventually price broke above the trend line, and then go to resistance at 31.50. Okay, go to resistance at 31.50. Okay, now the reason this is significant, like I pointed out last week, is that above this trend line, since we got a break above the trend line, ideally we expect price to continue to move higher from that trend line. Okay, since price broke above the trend line, which has acted as resistance since end of 2023, and eventually price broke above it here, uh, March 2025, right? With this kind of price broke above that trend. So ideally, it should have continued to push higher above the trend line. Okay, but resistance at 31.50, resistance at 31.50, and then we got a close back inside of that trend line. All right. So, as I pointed out last week, what it makes is that we do have a potential fake out. We do have a potential fake out. All right. We do have a potential fake out. And of course, fake outs like this ideally would trigger an extensive move in the opposite direction. Okay. Now, as it is, gold has found support at 29.55. Okay, 29.55 strikes 11. So from this support now, it's one that we need to watch. This 29.55 support level is one we need to watch. Okay. In the event that the price takes out that support, then that would be bearish for gold to continue to push to the downside. Okay, to continue to push to the downside, it takes out 29.55 support. Okay, but with the uncertainty going on, with the uncertainty going on, with the trade war that we see, right? Of course, gold is more of a safe haven asset. Investors will flock to gold during economic uncertainty, all right? And that has been the reason it has been bullish, has been bullish exponential, all right? So, from this support, you can expect price to push higher, maybe get some correction as a result of this bearish move. We may see some correction, right? And then the bearish move continues, all right? Again, like I said, if we get it close below 29.55, that would be bearish for gold. That would be bearish for gold. So let's see. From this swing high to this swing low, I'm trying to apply Fibonacci to get a retracement level. Sorry. So this is 50% Fibo level. And here we have this 1.8 golden level. All right. So I'm going to take off Fibo since I already highlighted those areas with these horizontal lines. All right. All right, so what this simply means is that this is my 50% level around 30.54, and this is my 61.8% level around 30.74. All right, so from this support, I expect price to continue to push higher into that area, okay, to that area from 30.54 and 30.74, okay, above 29.55 support. Expect price to continue to push higher into this area. Okay, and then what happens at this area will determine if I sell from this area. All right, what happens here will determine if I take sell from that level. All right, from that area. Okay, now if that fails here and instead what we get is a break below 29.55. All right, that would be bearish for gold. That would be bearish for gold. Okay, that's the daily time frame. Anyway, this is 1 hour. Taking swap, I'm trying to it's quite much. Let's see. Now, to answer your question in SWARE, now for me, direction, of course, is very important. Now, when you understand the overall direction, whatever indicator you're going to apply, whatever indicator you're going to apply, whether it's moving average, whether it's the linker bands, of course, we still look for an opportunity in line with the direction you are confirmed. All right. So, for instance, if the direction is bullish and you're using, for instance, moving average, that means that when you get a bullish moving average cross, that would inform your decision to buy since the direction is bullish. All right. A cross above the moving average will further confirm your bullish bias, for example. All right. So that's the uh, whole purpose of the indicators for me. You have confirmed your direction. You now need an entry. All right. That's where the indicator comes in. Okay. Let me see the second part of the question. Okay. Because of the deep part of the question, I'm going to go back to USD card. I'm going to go back to USD card. All right. Yeah. So I said, This is USD card on H1 time frame. All right. So I said that on the H1 time frame, we found support at 1.414, right? Found support at 1.414. And then the expectation is that if we get a bullish engulfing candle at this 1.414, all right? I said that would be bullish for USD card. Now, your observation is now that price is below moving average, which is correct. Now, price below moving average means that it is bearish. Now, if you observe, the minute it broke moving average, it became bearish, all right? It became bearish the minute it broke below the 50 period moving average, and then support at 1.414. Now, at this 1.414 support, if we now get a bullish engulfing candle, all right? If we now get a bullish engulfing candle at support level 1.414, I said that would be bullish for USD card, okay? For this moving average now, if you had sold the minute it broke below the moving average, of course, that would have been fantastic, okay? That would have been fantastic. Of course, you would also have been mindful of this support level at 1.414. So now that price is here, and we're seeing a bullish engulfing candle. Now, we really don't know if it's going to start giving us higher lows and higher highs at this point, but we may get a short-term retracement, all right? We may get a short-term retracement because of bullish engulfing at support, and then price returns to being bearish, okay, for USD CAD. I hope you got that, King. I hope you got that. Eddie, so for USD cards, we looked at the 102.6 level. We looked at the 102.6 level. If price continues to push higher from the 102.6 level, then it will be bullish for US dollar. However, as we said earlier, it breaks below 102.6 support level for USD index, that would be bearish for the dollar, right? That would be bearish for the dollar. Right, so this is the 102.6 level of interest, is the 102.6 level of interest. Now, a few pips away from 100.6 was now seeing series of higher highs and higher lows, all right? This is the most recent higher low, and now we're seeing the possibility of creating a new high, all right, from 102.6 support. All right, so welcome. Okay. All right. So for gold, what was said is that 3150 resistance, of course, have been aggressively bullish. You would agree with me. So very bullish, owing to the uncertainties that we have right now. Everything going on around tariffs and trade war. In times like this, seasons of uncertainties, we tend to see gold getting really bullish as it's a safe haven. It's considered a safe haven asset, all right? And that is largely responsible for this bullish move that we see. Again, no matter how bullish it has been or would be, it is also not immune to pullbacks, right? It's also not immune to pullbacks. So got to this high at 3150, right? Around 3150, and then it got bullish from that level. Okay, this is what it looks like on daily. It became bearish from 3150. Now, from 3150 now, this bearish move now has now returned to this 29.55 level. You notice that that was the high that was broken there, right here, okay, at 29.55. So price took out that high with this move there, and then you now see a pullback into that 29.55, all right, the previous high that was broken right here. Okay, so this 29.55, of course, is now acting as support for price. Now, again, two things. From this support level, this may continue to push higher, and then I also tried to also applied Fibonacci to get the extent of the retracement. And what did I do? Fibonacci 2 here, I picked it from here, and then from this swing high, all the way to that swing low. Okay, let me extend it here. Right. So from this swing high, all the way to this swing low, and then we're able to depict the pullback level. All right. This is 50% level and 61.8% level. All right. This area, right, very strong resistance. Okay, whether in a bullish market or bearish market. Okay, so in this case, we have a bullish market. All right. So I'm going to take out, since we have highlighted the two levels of interest, I'm going to take out the Fibo. All right. So from this support now, if this continues to push higher, then I'm going to expect it to come to this area. All right. This area represents the 50% Fibo level and 61.8 Fibo level. All right. So what happens here? What happens here will determine what I do with gold. Okay. Determine what I do with gold, but above 29.55, I expect it to continue to push higher. All right. Now, what would invalidate this expectation will now be a break below 29.50. Okay, will be a break below 29.55 support level. In that case, we switch to a bearish bias for gold. With a bearish bias for gold. All right. This will be a good place to leave it in the absence of any more questions. This will be a good place to leave it for today. On today's edition of our morning market review, we have a few aspects that we can add to our watch list for today and even for the rest of the week, depending on how this plays out. All right. Of course, tomorrow, Wednesday, we're going to have another session. We're going to have another session of the morning market review. Do plan to join us by 8 a.m. as well. Thank you very much for joining today. Okay. Let's see. Very fast. All right. So of course, pound support. This is US 100 now. Pound support right here. Here, back here as support. Back here as well. Back here as well. And then fast forward to what we got recently. That was yesterday. Price again, it tested support side, even broke below it, and now is back above it. Okay, so this still stands as support. All right, still stands as support. So what it means is that if it stays above this support, we expect price to get bullish from that point. Of course, there's still a lot going on around the tariff, so you can still expect some volatility right here for the US indices, US 30, 100, 500, even 2000 as well. You can still expect increased volatility around the US indices, okay? Around the US indices. But in the meantime, it's presenting an opportunity to go long. It's presenting an opportunity to go long above the support. Okay, above support at 17,346. All right. Thank you very much once again. It's great. So I've been talking to us for past 1 hour, I believe. I wish us a great trading day. Do join us same time tomorrow, 8 a.m. for another edition of the morning market review. Thank you very much. Have a great trading day.